Okay, Amber, we're back at it once again with a live stream. Middle of the week, it's Wednesday, right? Is it Wednesday?
The days just moved by, but I think it is Wednesday. We did good. We did made it on Wednesday.
Wednesday, baby, 12:30. We're back for our our weekly live stream. Today's a really exciting one because last week we were talking about how there's ways to really pay off your mortgage super fast that people maybe don't know about or weren't aware of. So I thought, why don't we dedicate an entire live stream today to just talking about really cool hacks for paying off your mortgage. So if you're joining us live for the first time, thank you for coming. Thank you for coming to the party. My name is Lacey McCarty. I'm your Las Vegas realtor, Las Vegas lifestyle expert, and your best friend, basically. Amber Coleman is one of the top 200 lenders in the nation. She works with Guild Mortgage. She's the smartest person in the room, especially when I'm the only other person in the room. So I like to make sure that she's online and she shares her knowledge. So if you're joining us, just so you know, this is for you. So if you have questions, even if it has nothing to do with what we're talking about today, drop it like it's hot in the comment box below. Let us know how we can serve you. We'll certainly answer those questions during our live stream. Last week, we had some technical difficulties. This week, baby, we're back at it again. So Amber, I do not want to waste any time. I definitely want to jump right into this. The main thing that we wanted to focus on for today is really, how do you pay off your mortgage quickly? You typically work with people, and jump in here if need be, that are getting a 30-year fixed mortgage, which is awesome. 30 years to pay off a house. But what if I don't want to spend 30 years paying off a house? What if I want to be paid off in 10 years? What would you say to somebody like that?
This is my favorite subject, right? Because just out of personal experience, when I bought a house after we've given our dirty laundry on this, right? So after losing everything, bought a house, it scared me so much that I was like, I got to overcome this fear. And so what I did was what we're going to show you today. I figured out how to pay a house off in 10 years and to discipline myself so that I didn't have to fear. And honestly, I wasn't owned by anybody anymore.
That's right. Amber, you've always been so open and honest and vulnerable on our live streams. And I think that's one of the things that obviously makes me love you, but makes our clients feel so safe with you. This is a judge-free zone, my friends. We don't care what your credit looks like. We don't care, what you make, what you don't make. Air your dirty laundry to us. I always say to everybody who I pass over to talk to you, treat her like your priest, confess all, and then let's get going so we can get you into a house. So if you're thinking about buying a house or thinking about moving to Las Vegas and you just want more information, you want to ask some questions, or you want just a friend to kind of help you dream a little dream, I'm your gal. Be sure to click the link in the description below, or you can text me on that phone number that's running across the screen right now. We'd love to set up a time to chat. I just want to make note, I did not get we are going to look professional today on our live stream memo. So I'm definitely slumming it today, working from home.
You always look adorable, though. Come on.
Good. So I'll step up my game next time. Also, before we jump into this subject, preview for this coming Friday, we're interviewing a home appraiser, one of the best in the city, and he's going to answer a ton of questions about what you should and shouldn't do to your home, or basically what's going to add value and what isn't, how they look at homes in terms of how they're going to assess the value, so that you guys can walk in with the full knowledge of what to do and what not to do, and also just how this whole thing works. So stay tuned Friday at noon or 12:30. I can't remember when we have it scheduled, but be sure to tune back in for that. Okay, Amber. So I'm going to come to you. I want to do a scenario with you, and I'm going to put something on the screen. I'm going to say, okay, Amber, I've been in my house for this long. I just want to pay it off quickly. I don't have a lot of extra money. It's really scary, but every now and then I'll get a bonus, or every now and then, if I just know that I can maybe cut out Starbucks for the month, I might be able to add that money to my mortgage. I want to take a couple years off my mortgage. Can you walk us through that calculator that we were talking about earlier today and show how easy it is to cut years off your mortgage?
Let's put the calculator up. Let's do this. You know how much I love math.
I hate math. So you jump right into it. So if I'm buying a $350,000 house, and again, guys, I want to make sure y'all know when you're watching this, the rates this is just rates we're using, that your rates and information could be higher. So you need to make sure you get a loan estimate before choosing a loan. Call me, I'll connect with you, and then we'll talk to Amber and get you started. But let's pretend, for instance, I'm buying a $350,000 home. That's how much money, that's the most I can afford. What do I need to do at a 6.5% rate to cut that to 15 years? I want to cut half the time off.
To 15 years. Well, okay. So let's say, for example, you're going to put $500 extra on it per month.
Now let's stop there. When you're making an extra payment towards your mortgage, everybody who's watching, I want you to know, don't just make a payment. You need to make sure that payment is applied and it's noted in the payment only to be applied to your principal balance. That way, you're not just adding more money towards the bottom line of your interest. You're chunking down the actual basis of the loan, right, Amber?
Exactly. You just want to make sure it's noted in there. But so let's just play around with the numbers for a second. So if you whatever your mortgage payment is, principal, interest, taxes, and insurance, you add an additional $500 to that payment so that it brings it, paying towards principal only, right?
Yep.
If we look over to the side of the screen, it's going to show scheduled payment based off of the criteria that we put in, schedule a number of payments, and then actual number of payments. So an extra $500 a month
towards your principal, right?
Is going to cut your payments down to $223 over the life of the loan. So it cuts it down over 18 years.
So I can cut 18 years off of my loan if I stop going to Starbucks and I stop maybe going to Marshall's and buying stuff for home decor these are things that I do actually. So let me just be very real with you. No more Starbucks, no more home decor visits. All I need to do is find an extra $500 and I make it towards the principal payment once a month. And I can cut 18 years off my loan.
You can cut 18 years off your loan. Let's see how to cut it in.
What if I just had an extra $100 a month? What would that do?
So if we do $100
towards the principal.
So $100 every month.
Yep.
So that's going to bring your payment and the amount of payments, actual number of payments, to 318. So if we take 318 and we divide it by 12, then that cuts it down to 26 and a half years is what it would take you to pay off that house versus 30 years by just making an extra $100 a month to your payment. So $1,200 extra dollars a year.
What if I got a bonus from my job and it's like a $5,000 bonus? First of all, someone want to throw me a $5,000 bonus? That would be nice. Let's say I made an extra $5,000. Like my boss gave us all bonuses and I want to really be smart with my money. And I want to put this towards the principal balance of my loan, put $5,000 in there. And that's not a monthly payment. Is it going to do that?
Well, so we're going to cut that into a monthly payment. So we'll put, so 5,000 divided by 12 is $416.67.
Okay.
So then that's going to cut your actual numbers of payments to 237. 237 divided by 12. You would pay your house off if you did 5,000 extra per year, every year, right? It would cut your balance down to you'd pay it off in 19 years, almost 20 years. So just right under 20 years.
So it takes 10 years off the loan.
A little bit more than 10 years off the loan.
Amazing.
Yeah.
So this is something that we really want to kind of bring up to you guys, and we can run numbers. So like, let's maybe, how about we do another amount? So like maybe we do a $500,000 house, and can you do a different rate for us? Because I know the rate does make a difference, right?
Yeah. So let's do 500,000.
Okay.
We'll do 7% interest rate.
Okay.
And remember, we're just throwing rates out there because they've been moving a lot lately. They're all over the board, depending on the day, right?
Right.
So we have loan period 30 years. And then number of payments, you're going to make 12 payments every year. Start date of loan at 3/1. So how much do you want me to throw at this one?
So let's say I put an extra $500 a month towards my mortgage, my principal balance, 500.
Okay. So if you pay, if we do that scenario, if you pay $500 a month more, then you're going to cut it down to 247 payments over the life of the loan. And then if we divide that by 12, just so we can understand it, it's 20 years and 50 months. Like, so just right under 21 years is what you're going to be looking at.
Almost
you cut off 9 years.
Wow. So that's awesome. What about like, what if somebody, like I said, like, it's easy to say, oh, I got $3,000 back in my taxes or something, right? If I just wanted to make like a one-time $3,000 payment, not every year, or maybe it is every year, right? Maybe I get that much back in taxes every year. Tell me what that would look like. $3,000.
Well, so if it's just one time through the life of the loan, then we're looking at over 30 years. So that's like basically $100 a month. Since this amortization schedule is figuring out monthly, right? Look at how much you're still cutting off that just by making that one-time 3,000 payments. So then that's $100 equivalent a month, right?
Wow.
So 328. So then basically, then you've cut off 2 years and roughly 7 months.
Wow. So, I mean, like, what I think people don't realize is like, that, it feels like that's my payment forever. But you don't realize is up front on those front payments, most of what you're paying is interest. So it doesn't really start chipping away at your loan until well into the lifetime of the loan. So it's just
Mhm.
super important for you guys to know that you can hack the crap out of your mortgage in a lot of different ways. And this is the biggest one. Some of the other things we wanted to mention to you guys that are, I think, super important and something to kind of keep in mind is we want all of you to be homeowners, right? And a lot of us don't think we can. So when you look at how much money you're paying towards rent and that's going towards nothing, right? And then you look at what we just spelled out for you, that if we can get you qualified for a loan, we can get a payment that you're comfortable with that's close to what you're paying in rent. And then let's say you get a raise or you stop going to Starbucks as much as I do, or you don't stop by Target on the way home from work and shop in the clearance aisle because you're bored. Totally feeling seen right now. Anyway, all of that being said, if you do those little things and you can be disciplined, even if it's once in a while, it doesn't even have to be consistent. It could be every once a month or once every 6 months. You go, you know what? I'm not doing Target runs this month. I'm going to take the money I would have spent at Target and just send a check to my mortgage company to go towards the principal balance. You can hack years off of that, which is amazing.
It's
One of the
really
other,
cool, honestly, because I mean, think about it. That's like true freedom. Like,
yeah,
even if you're heading into, like, I always look at this, if you're heading into retirement years, the best way to retire is not have a housing payment. You're
right.
always going to pay taxes and insurance, but if you can cut that housing payment out of it, so
Yep.
just by looking at things in advance to be able to figure out how to best get your future to work for you, it's a great
Yep.
way to do it.
I love it. The other thing I was going to
Mhm.
say is, another idea for you guys is biweekly payments. This is something that not every lender is offering right now, but you certainly should ask. But a lot of people are looking into where it's, normally you would pay your mortgage once a month, right? So rather than sending your entire payment on that due date, you have to arrange for the biweekly payments. Don't do this on your own because it's going to look like you're not paying your whole mortgage when the full payment doesn't come in, but arrange for biweekly payments for half the month to be able to split it up. So if your payment was 2,000, you would instead be sending like $1,000 every 2 weeks. The result that will have is you will end up actually making an extra full mortgage payment per year. So it's chunking away at the loan in a different way, but it's not necessarily going straight to principal, but it's splitting it up. It's not as much of a hit when it comes to the monthly payments. Amber, how does that work when it comes to lenders? I know not all lenders do it. Some of them pull it off and pull it on as an opportunity. Why is that?
Well, okay, so it just depends on their servicing department. Like, some lenders will sell the loans all the time, so you're dealing with different servicing departments. And so the way that they service things, they might not have it in there all the time. But like,
Right.
if you look at the numbers, so like if you're doing it on a biweekly basis, so you know how when you get paid every 2 weeks, there's
Yes.
going to be 2 times in the year where you're going to get an extra paycheck, right? So like, instead of, you're going to get 26 paychecks instead of 24, even though you're every 2 weeks, because of how the numbers work out, right?
Yep.
So you're basically doing this the same way by doing it every, so if you're paid, this is where it would be smart. Like, if you're paid every 2 weeks,
Right.
and so those twice a year you're going to be getting an extra paycheck, and then all of that goes towards the payment on your house, then you're doing that without even realizing that you're doing it, because you're just taking your excess money and putting it all there.
Right.
So
You will be so surprised at how quickly you can do that. So many people calling out, they want to do house hacking. They want to figure out a way to game the system. The real way to make money and be a real estate investor and be someone who can actually let your portfolio pay you a paycheck is to pay off that loan as fast as possible. So if you can get real with yourself, like I'm doing during this live stream, talking about not going to Target and all the things. If you can do that and just honestly earmark, I was going to go do this, but I'm going to put that money over here and I'm going to actually put that money to work. You could be buying another house because this one's already paid off, and then doing the same thing with that one over and over and over again, and have those houses paying your mortgage. Buy a house, turn it into a rental. It's amazing. We want you guys to be thinking about all the good things for you.
yeah, and just think, like, when you really want to go to Target, right? Instead of being obsessed with the sales rack, be obsessed with making money for yourself, because that's going to lead to endless Target trips once you're through all this.
That's right. That's right. What about the idea about a rate adjustment? That's something that I've talked with you about quite often, especially when we
Mhm.
start to see rates really come down. A lot of people think now I have to do a refinance, and they get really scared about the refinancing process because maybe their situation has changed. Maybe they wouldn't qualify as well as they did before. Who knows, right? There's a billion reasons why you would want to do a refinance, but isn't there something else that can be done when you call your lender that you're currently with to ask for something like a rate adjustment?
So, okay, so here's a couple different things. So, I mean, rate adjustments are more given when the market adjusts, right? So, but refinancing isn't always necessary like you would think about it. Like you're thinking about refinancing as a lot of fees being added on and all that stuff, right? When you have an FHA loan or you have a VA loan, FHA loan, it's called a streamline, and a VA loan, it's called an IRRL. So basically,
Like
what's
in real
happening,
life,
yeah, yeah,
IRRL.
real life. So basically what's happening with those is they're just taking on FHA and VA, the lender's just taking your old rate and streamlining it into the newer rate. So by doing that, you're not verifying. The scary part about refinancing is you got to re-verify the appraisal. You got to verify all these different things, right? By doing these ones, the streamline or the IRL on government loans, you're taking away all the verifications. There's no appraisal needed. A lot of times we don't even have to verify your employment. It's a very streamlined process, and so are the fees. The
Awesome.
fees on these are very cheap to be able to do these. So you're not taking on the full refinance. And a lot of people right now are on FHA loans or VA loans. Conventional loans are a little bit different. Conventional loans is a true refinance where there's sometimes the appraisal is waived too. So
Right.
it just depends on how much equity you have in your house and stuff like that when you're looking to get your rate down. But that's going to totally change all these numbers too when your rate goes down. It'll make it a little bit easier to be able
Awesome.
to cut years off.
That's awesome. I was telling people recently, how we always say, date the rate, but marry the house, like, don't worry, we can always refinance it later. I think that still scares people because they think of refinancing, just like what I said to you a minute ago. They think it's, this horrible experience. It's an uphill battle that they don't want to go through again. They went through a loan once. They don't want to do the paperwork again, that kind of thing. So it's really cool that there's an opportunity to streamline that experience, or IRRL in real life. I just had to find a way to use that again. But so for those of you who are thinking about buying and you're like, I'm just going to wait for the rates to drop, maybe consider doing what we just said and buy now, date the rate, knowing the rates are going to come down. And then when they're in a place that you want to refinance, call Amber and say, okay, let's look at streamlining me out of that old rate and into a new one. And it could be way less intrusive and scary and cumbersome than you think. It's awesome.
Yeah, yeah, or look at the long-term picture of buying a house, because you can always pay extra with extra money that you make. I always feel like when you're buying a house, there's a financial benefit, but it's almost, to me, it feels like you're building a foundation, a mental foundation for yourself. So once you have that foundation built, you can build on top of that with what you make, what you do, all that kind of stuff, because you don't have to worry about being kicked out anymore of the house that
Absolutely.
you're in while living in a rental house.
The last thing I wanted to talk to you guys about is tax refund. So this is something that I know in the past have made a big mistake of thinking my tax refund is play money. Ooh, we're going to go on vacation. Ooh, let me go shopping. Ooh, I'm going to use this as a down payment for a new car that I don't really need or whatever, right? So, or pay down bills, things like that. But I urge you guys to maybe think just a little bit about the fact that, that tax refund could absolutely take years off of your payments for your house, like we just did. So when I just asked Amber to do let's do it again, Amber, just to show. We did the $3,000. Let's say my tax refund is $3,500. Can you do that number?
So $3,500. So what I'm going to do is I'm going to take $3,500, divide it by 12. So we're looking at a monthly. So this is assuming that you're going to put $3,500 extra on your $3,500 per year on your house. Look at what that cuts off. So it brings it down to 283 payments on it. So if we divide that by 12, if you just give your tax refund every year of $3,500, it cuts you down to 23 and a half years to pay off a house. So basically your 6.5 years just cuts off your 30-year fixed.
Wow. So that's something that I just really want to make sure we're getting through to you guys, like those of you who are watching, who either already own a home, or if you're thinking about buying. Not only are we here to help you obviously get over the hump, get access to all the free money programs, get the best lender on the planet Earth right here in front of me to be able to work a game plan for you, but we want you to actually build a life that has money incoming for the rest of your life. And the fastest way to do that, or even just a life of freedom, to just have a paid off house, so you never worry about it, right? And that comes from paying off that mortgage way, way faster than you thought. The other thing that you should consider doing if you're already owning a home is maybe adjust your, if you're not as disciplined, like I'm not super disciplined when it comes to that stuff. adjust your dependent withholding so that more taxes are taken out of each paycheck. And that change in dependence is essentially going to be like a forced savings, if you will. So then when you do get that tax refund at the end of the year, that's your forced savings that you already have earmarked for. That's not money for me. That's money that's going towards my future, which is to chunk down and pay down the mortgage. So I love it. I love all these ideas.
That's a good idea.
Like these house hacks are definitely all over the internet, and people are constantly trying to figure out how to game the system. If you want to game the system, maybe make biweekly payments, work it out with your lender, maybe ask your lender about a rate adjustment, pay down your mortgage with your tax refund. At the end of the day though, if you have the ability, whether it be a bonus or an inheritance, or you stop going to Starbucks every day and you save that money and you actually make that money work for you, and you just make, even if it's every now and then, just random little payments towards that principal balance, you will be very, very surprised at how fast it goes down.
I love it.
What else, Amber? Any other tips for everybody today? I know that we've been really having a good time. It's been a busy month. Any other tips before we give updates on the market?
I mean, I just think when you're buying a house, if you play the long game, you always win, right? Yep. So like even just doing these numbers, seeing that it's just a few $100s extra cuts off so much.
Yep.
Let's figure out what your long-term plan is, and let's game plan that as well as we game plan getting you into the house.
Yep.
Like make sure that we meet all your goals, because then saving the house payment, you can put all your money into money market accounts or so many different things, stocks, bonds, and be able to make money off your money once you don't have bills anymore.
Yeah.
So
the one thing I encourage everyone who calls Amber to talk to you about, we're going to get to your questions in a minute. I'm seeing a ton of comments, guys, so keep dropping them in the comment box. We're going to jump over to questions. But one of the things I encourage people to do when they talk to you is to actually talk about, okay, I qualify for 400 and that's my max, what I can afford for my payment. What happens if maybe I know I'm okay paying this number, but if I only spend a little bit less, but I still make the payments as if it's this number. So that extra money each month, if you're in your brain, that's my house payment, whether or not you're spending that much money. If you're making a house payment for $425, but you only bought a $400,000 house, that extra money in your mind that's already earmarked that could go towards your principal balance could make a massive difference. So game planning it on the front with Amber and running those numbers, asking what does this do if I buy the rate down on my own? What does this do if I let them buy just ask all the questions so that you can really have a full and complete understanding of how to hack the shit out of your mortgage. That's the plan.
And you know how I like numbers, so let's work them.
I love it. All right, let's run over here and talk and see who's joining us live. We got Nita Applebaum. Happy Wednesday, ladies. Hey Boomer. Hey ladies. Matt Smith. Hello Matt. Sammy Bowen, hey loves. Oh, I love it. Love you guys. This is awesome. DLVTT says, no matter how I'm looking, it's still gold coming out of my mouth. Thank you. Well, that's good because it's not coming out of the grill today. That's for sure.
You look beautiful no matter what. So.
Well, listen, I'm going to keep asking for the compliments. Sammy said Boom, her husband, they were just having this conversation about how to pay off their mortgage quickly. Ashad says, I get $60,000 to $7,000 a year as a capital gain from my investment. How much of a home can I get? It's a good question. Interesting.
So if you get $60,000 to $70,000 a year every year, and we can show it on your tax returns, and we can show the ability that it has to continue, then we can count that as income. So added to your income. So it depends on what your debts are, but that's additional income that you have coming into your house because of you're receiving from capital gains. We just have to show that you have a history of it, and then you have it looks like you might have a 3-year continuance of it.
Awesome.
But additional income, it's hard to say how much of a house you can get because I don't know what your bills are, but you can add that as income on your application.
Oh, got it. Love that. Oh, Sammy's asking a good question. When does the rate apply? From when you put in your offer or at closing? When does your rate get finalized?
So your rate gets when we lock you in, basically when we lock your rate in. So you're going to lock it in anytime between putting in your offer and closing. Lately, The rates have been pretty steady, with where they're at. So there hasn't been a lot of movement in the wrong direction.
Right. Now, a lot of people, when the rates were kind of on the rise in the past, they were doing these lock and shop programs with you. Is that still available?
Yeah, no, it's still available. So if it's something when you're shopping for a loan, if you're worried about rates increasing, we can lock you in right when you're shopping for the loan. And then after you get the house, if rates go down, then we have the option, even though you're already locked, we have the option to do a one-time float down
So
on
you
that
float
lock
down
and
to
shop.
whatever it is currently, and then
Mhm.
it locks again.
Yeah, there's just an upfront fee to that, but it's a really cool program.
Awesome. Ooh, Matt
Mhm.
says, is there a specific contact you need to send the extra payments to for the servicing company? I tried to pay extra on one of my loans and they mailed the payment back. That's
What?
interesting.
I don't know if that was a mortgage loan that you tried to pay extra on, but yeah, some companies crack me up. But no, it's the same company. So if you pay it online, usually there's a place where you can allocate how much you're going to pay, and then you'll make your normal payment and then allocate an additional $500 or whatever it is to principal only. That way you're
Awesome.
not paying any interest on it.
Awesome. Ashad is asking for us, is it possible, he would appreciate a response, saying a $1 million USD loan.
Is $1 million in a US, is that USDA loan or
I'm not
US?
sure, Ashad. I think we're going to need more information. Maybe if you want, text me on the number at the bottom, or you can click the link in the description. We'll set up a call. I'll get you right over to Amber. It's hard if we don't have all the information and details when we're looking at doing loan information answers, but let us know. We'd love to help you.
Yeah.
Let's see. Sammy says, oh, Boom and I are getting you a coffee pot as a thank you gift, Lacey. Oh boy.
Sammy, you're so
Awesome.
cute.
Awesome. Awesome. Richard DeToy says, no house payment. Music to my ears, Amber. Look at this. I love you
Yes.
guys. Okay. Matt's asking yet another good question. Matt, I'm not kidding. I really want to hang out. Let's call. You got my number. Let's go. You have such good questions. I'm going to make you a realtor. What if you refinance the value of the house? Oh, sorry. What if you refinance and the value of the home goes way down? Will they let you refinance?
On certain loans. So like remember FHA loans and VA loans, when you do that streamline that we just talked about a few minutes ago, there's no appraisal needed for that.
Love that.
So on conventional loans, certain products could be a problem if the value goes down.
Yeah. Now, I don't know when the last time, Matt, you looked at our values in Las Vegas, but values in Las Vegas have, not gone down. They've just not gone down. They're not going down, not anytime soon. So that's what my crystal ball says. I don't know. But good questions. Again, call me. Let's talk. Boomer says the process of getting financed is emotionally and mentally taxing. Having the ability to get a better rate without having to do that process again would be amazing, right?
It would. And like we said, any FHA loans, you don't have to go through the whole process like that, where
See,
you're having to get all your paperwork and making sure you're working the same hours every week and all that fun stuff.
love that. Boomer also says words of advice. Oh, I love this. Thanks, Boomer. Boomer's in the process of buying a house with us, if you guys can't tell. So congratulations. If you have any gaps in employment and need to get your earnings for the years before your gaps in the employment, go to the Social Security Administration. They keep those earnings records and from the time you started working, your first job ever. And that's absolutely right. That's really, really, really good. Good advice.
You know what? I said if I can clone Boomer, I totally would.
I know. Boomer and Sammy are probably the coolest, most easy, most organized.
But you ask something and they figure out how to get it done too, like that. Like I didn't even know you can go to the Social Security Department to get that history.
Yeah.
So good job.
Have a drink of whatever podcast. First of all, love the name. Thank you so much for the information and perspective you supply to everyone here. Our pleasure. Thank you for watching. Please tell your friends. I agree. Matt says, I agree. Rates go down, prices go up. That's right. All the more reason that leads into my next conversation with you guys, which is exactly that. So Amber, let's give a very quick, brief update on what the heck's going on in the market right now in your world. How many have you seen in terms of applications for mortgages coming through? Are we seeing an uptick still?
Major uptick. So like it's leading right into, how they always say like spring buying season and stuff like that. That's because that's for some reason when it gets warm, everybody comes out, but it's happening earlier this year.
Right.
So people are coming out of the woodworks to get a qualified and go and contract on a house because I think people can naturally feel what's happening. We saw COVID happen where rates went down, prices went up. And then we saw last year happen where rates went up, but prices didn't go down. In fact, I think we overall gained, like if you take an overall picture, I think we gained like 5% in equity.
Yep.
And, if you do the overall picture. And then so now this year, as we know, it's a year where rates are going to slide down because the feds who control our market have said it.
Right.
People are coming off those 4 to 6 million people that have been sitting on the fence that we've talked about many times. They're starting to come off the fence.
And I'll tell you right now, I said it last week, you know, in about a 10-day period of time, or it was actually about 8-day period of time, I had over 150 people reach out to me directly to want to buy a house. They weren't reaching out like they normally do, which I love when you guys do, which was, hey, I'm thinking, I don't know, I'm considering it. Almost every single one of those people was ready to go. So hence the reason I'm wearing a sweatsuit today. It's been a little bit of a busy month, but so grateful that you guys have trusted us and that you know that we're going to give you the absolute best advice and the most direct conversation when it comes to your ability to buy. We don't want you to wait too long. We don't want you to wait until rates drop, because when they do drop, the prices will go up and you'll have a very hard time making up for that gap in terms of the opportunity lost. So please just let us know. I've already, just again, to give you guys an update, we've also got people like doing multiple offers on houses, and people are already starting to compete a little bit. So please get out there, call us. There's new home opportunities, there's resale opportunities, quick move-in opportunities. There's a lot of things. Just let's talk, and I'll get you up on the what's going on the skinny, and then we'll have you talk to Amber when you're ready to start the qualification process. What do you say, Amber?
I say it's a great thing. Let's work your game plan. Let's get you in.
I love it. So once again, guys, if you want to pay off your mortgage fast, make a little bit of extra payment, whatever it is, whenever you can, towards the principal balance only. Make sure you indicate that it's going to the principal or it won't work. Make sure if you're getting an awesome tax refund, maybe reconsider that new pair of shoes and that purse, and maybe put it towards your house in your future. Make biweekly payments. That could be something that you have to organize with your lender, but maybe do that. And, you know, and just at the end of the day, just maintain a vigilance and understand that you're in charge of your money. Don't let your money be in charge of you. And so work a plan. Get out of Starbucks, get out of Target, put that $20 here, $50 there. All of that chips away at the bottom line. And it's amazing. And then the last thing is just making sure that you stay aware of what's going on with the rates and ask for a rate adjustment, not necessarily a refinance, doesn't have to be a refi, but a rate adjustment, so that when it's your time, you can make that happen. Easy peasy, 1, 2, 3, easy. So
love it.
All right, guys, we're going to head out here. Thank you guys so much. We appreciate you joining us as always. Join us Friday. You do not want to miss it. We're going to have a third person on the screen with us, Brent Jones. He's going to be doing some awesome discussions about appraisals, how they work, what they do, what you should and shouldn't do to your house to add value, because so many people do it wrong. And we're really excited because he's one of the best in the business. What do you think?
He really is. I'm excited for Brent. Let's put him on camera.
All right, guys, we're going to sign off. Thank you so much. We'll see you soon. If you want to talk to me, text me the number or click the link in the description and we'll be in touch. Talk to you soon.